Welcome to July WASDE update report with Advanced Trading. I got Luke Hickey and Brian Basting with me today. We're going to talk a little bit about what this report gave us and maybe what we're seeing going forward. I guess we'll look at the report, Brian, as it just on the surface. It didn't have a lot of fireworks, but it gave us some nuggets. What was the first couple of things you saw in this report?
Well, I think that the first nugget that caught my eye, Mark, was the USDA did increase the size of the Brazilian corn crop, a couple million tons from what it was there in June. But boy, the boots on the ground, the reports we're hearing, Mark, are bigger than that. So I just remind the viewers that this number is a fluid number. They're right in the middle of harvest there. And I'd remind the viewers that some estimates are as high as 135 or maybe 140 out of Brazil. A few are even higher than that.
I've heard 150.
Oh boy, 150. You know, stranger things have happened. Yeah. So I'd remind the viewers last year that number, Mark, was 119. And that really opened up the window for U.S. exports the first half of the crop year. And we saw a nice rally in corn prices the first half of the crop year last year, September to February. But to remind the viewers, if Brazil is really 145 or 135 or 140 or even higher, as you said, boy, that could really curtail our export program this fall and especially this winter. And so I think that the thing that surprised me was USDA was a bit conservative there from what we're hearing results on the ground.
So how far are we in harvest on the safrinha crop?
I think they're in Mato Grosso, the largest state in the north. They're over half now done. And it looks like they're in the dry season. So that'll accelerate here the next couple of weeks. They're moving slowly down there. There's no big incentive, a price incentive for a Brazil producer to go out and harvest their corn. They don't have the risk that we have, that our growers have here in terms of rain at harvest and quality. It's a dry season, so they can take their time. But I think probably by the 1st of August, they'll be at that 2/3 level, maybe nationwide. And then you get in the middle of August, they'll be wrapping things up. So the next 30 days, they'll be right in the middle of harvest and approaching really where we're going to put it all, because we're hearing a lot of talk, Mark. There isn't going to be enough storage space, and they're piling a lot on the ground and in bags down there.
On the U.S. front, we got our first look at the wheat balance sheets by class. Was there anything that stood out in that space that kind of surprised you in this report?
A reminder, maybe is a better word I'd use than a surprise, Mark, that we've got ample supplies. They gave us the final crop estimate, beg your pardon, final ending stocks estimate for soft red winter for the 24-25 year was higher than what they had been penciling in. So the bottom line is, even though they reduced the soft red crop in this report by about 8 million bushels, 8 or 9 million bushels from what it was there in June, still looking at a carryout for 25-26, Mark, a soft red winter approaching that 115 to 120 level. That's plenty. So it confirms, for lack of a better word, that we're going to have ample supplies. I defer to you in terms of spreads and that type of market impact. But same thing for HRW. Good, excellent yields being seen out west for the most part. Acreage was down a little bit. Harvested acreage was down, but we knew that from the acreage report at the end of June. Bottom line on wheat, Mark, is that we've got plenty of wheat, even though the all wheat carry out is not that much higher than what it was last year. 850 last year, 890 this year. We've got plenty of wheat, and we're still the residual supplier to the world.
Staying on the soft red wheat world for a minute here, we saw boots on the ground, and we're telling us really good yields in Illinois, really good yields in Missouri. And USDA said today, yep, record yields for both those states. They increased Missouri by, I think, 5 bushel to the acre. Illinois maybe up 1, I think was the number. They're still penciling in a potential record out of Michigan. They're just starting harvest. Ohio and Indiana are rolling as we speak. There's a chance that we kind of rival that record yield that we had 2 years ago, was it? Near a little over 77 bushel an acre, 77.4 maybe or something. I guess they'll confirm that in the August report. Well, maybe not confirm it, but we'll potentially see some adjustments. Is that fair?
It is fair. We're hearing the same thing, Mark, not only in parts of, as you said, Indiana, Ohio, Illinois had some really surprisingly good yields. There was a lot of concern in southern Illinois with all the rain we had this spring, Mark. Fortunately, it looks like most of the producers down there dodged that bullet, as it were. And I think the producers, as you and I have talked about, the last few years have adopted better farming practices, whether it be fungicide application or whatever it may be. Relative to the U.S. crop condition ratings, we're seeing these yields really reach record levels, I do think we could challenge that record yield that we saw a couple of years ago. So that only will add to the balance sheet, because I just don't see the demand there for soft red. USDA's got us penciled in for, I think, 120 on the exports, 120 million. That's just status quo. Without China, we don't have an export push there, and we don't have wheat in a competitive position to substitute for corn at the moment.
So as it stands today, our export program on our wheat continues to be routine, for lack of a better term.
Yeah, it's not terrible, but it's not anything stellar. It's just routine. Like you said, we got our Western Hemisphere demand we always get, and a dab here and there of soft red to other areas. But I think the hard red is off to a good start. Maybe hard red winter, Mark, might have a tad more bushels this year than last year. USDA at 275, that seems a touch high. I would say 250 to 275 isn't out of the realm of possibility. I think we're at 215 to 220 last year. So maybe a bit of an uptick there. But when you look at the total amount of projected shipments from Russia and Ukraine, our primary HRW competitors, those numbers are up from last year in terms of total exports. So I think we're not looking at a window there unless we see a surprise from the Southern Hemisphere.
And
Either Argentina or Australia have a problem.
The last time we saw China buying any significant soft red wheat was 2 years ago, right? A year and a half ago.
It was 2 years ago.
Yeah. Okay.
Yeah.
So shifting to the corn story, when we kind of look at the what the USDA told us here, they gave us a real, they're confirming, I guess, because we're still in the middle of our crop year, a solid export program. They raised our exports 100 million. Is that right? So at 2750, which would be a record export program by, I think we looked 3 million bushels.
3 million bushels, right?
2021 year was the year we had the record year, record export program. So fast forwarding to the crop that's in the ground today, that's growing. If you look at that balance sheet, they have a pretty aggressive export program penciled in there. It's at 2675. That sound right? Okay, 2675, which sounds pretty aggressive considering the size we just talked about, the potential for South America, the safrinha crop being a potential bigger than what the USDA and maybe the world's looking at. What do we, I mean, do we believe it? I guess is the question. What's your guys' thoughts on that?
I guess we were chatting a bit a while ago that we looked at the first half of the crop year last year, and the U.S. was primary shop in town for corn in the world. If you wanted corn with a smaller crop in Brazil a year ago and a smaller crop in Ukraine a year ago, the U.S. was well positioned. We saw a nice rally in the corn market from harvest all the way into mid-February. I just remind the viewers, every year is different. We don't know what's going to happen tomorrow, much less 3 months from now. But if you believe that the Brazilian crop is going to be large or larger than the USDA has penciled in, it's already a lot larger than last year. And Ukraine's crop is up 3 to 4 million tons forecast. Again, it's growing as we speak. But we could be looking at a much different picture this year, Mark, compared to a year ago. And that has some pretty important price implications for the first half of the crop year, I think.
Cesar put together a chart, and I think we can pull that up here, but it basically was looking at what the USDA did or was thinking the Brazilian exports were going to be a year ago, and they were pretty aggressive at 55 million metric tons. Ultimately ended up just being over, I think, just over 38 million metric tons, which is closer to what the CONAB Brazilian estimates were at the time. So this year, the USDA is a little more conservative. 43, I think, million metric tons. Maybe that's part of their logic to why the U.S. exports have to be up a little bit. Is just somebody has to kind of pick up the load somewhere, I guess. Is that a reach, Luke, you think? Or
Yeah, and you also think about the other factor that's changed in Brazil since, in this past year is they got more corn going into ethanol production. So their domestic consumption is going to continue to rise as more and more of those plants come on. So I think the USDA kind of took a step back. So yeah, there's much bigger crop to deal with here, but at the same time, they increase in domestic consumption for ethanol going up. And that number, as more plants come online, and especially most of them are being built in the Mato Grosso area, from what I understand. So I think the USDA just look at those two factors, got real aggressive last year, and at the same time, recognizing the fact that there is domestic consumption going up, but they are going to be competitive with us no matter what. And just another point, I think when we talk about this record corn export program, I mean, Mexico was a big part of that, right? I mean, you look at the amount that they continue to take, and they continue to buy, on a weekly basis. We got good export sales continuing. And at the same time, we're like, in a position to easily supply that market. Unless that thing falls apart, is a 2675 possible? Sure, but it's going to really hinge on that Mexican demand. Don't you think, Brian?
I think it'll hinge on that Mexican demand. And then the bottom line is how big is big in Brazil, I think. And as you said, Luke, spot on. How rapid is their domestic use going to increase the next 6 months to 12 months? And that's a fluid situation. We just have to wait and see. But I think USDA took a conservative route this year because last year they were very aggressive early with their exports, and it did get pared back quite a bit. But this year they could start conservative, and who knows, maybe end up going higher from that number, depending on how big that Brazilian crop is.
And that, I think I remember this, if I'm right on this, they did put this increase in ethanol, domestic ethanol blend rate going from 27 to 30%. And that is in place starting here, like this month or next month. So it's actually, they are going to ramp up that. And of course they can get it from sugarcane, but a lot of it's going to come from this bigger corn crop they have.
Yeah. We also had a big EU program this past year too, which is kind of a little bit of a perfect storm, I guess.
Yeah, we did.
Export program, I think is worth noting. Luke, when we look at the east to west on the old crop variants, it feels like, carryout continues to get a little tighter.
Yeah.
But if you were to talk to folks, Illinois, probably east of Illinois, they would probably have a much different opinion on the comfort level of these stocks. It seems like if this export program continues, it's going to be pulled on the west pretty heavily, and the east is going to continue to probably lean a little bit on Illinois and maybe some Chicago beyond type markets.
And if you look at the stocks report that came out at the end of last month there, it certainly showed the divide between eastern stocks and western stocks. And there again, that really shows up in the cash markets, because you've got some really strong points in the eastern market trying to pull corn in. And crush margins are decent, and they're continuing to and with the flat price being what it is, and the recent decline in futures, the cash market's job is to continue to pull those bushels in. And when you see where the stocks are sitting east versus west, that really shows up in regional numbers.
Definitely. We're talking to our customers in the east. It's there's 2 months, 2.5 months until there's probably corn available in the east. I guess it's the southeast can stop pulling on rail stuff, but nonetheless, you're going to have a big sucking sound, I guess, for lack of a better term, for a while until this new crop's available. So
we do have new crop available, but it's in southern Texas and way down in the Delta. And I don't think that corn's going to make its way up into those plants in Ohio.
That's fair. Yeah, 100%. Brian, as we kind of look at the rest of the world, you mentioned the Brazil numbers. Was there anything else that you noted in the report that was worth kind of mentioning?
Ukraine a year ago, Mark, had a smaller corn crop, which again helped funnel in more business to the U.S. in 24-25, particularly that first half of the crop year. Now, Ukraine's crop is pretty much on the same schedule as ours here, i.e. they'll be pollinating here the next 30 days or so. So we don't want to get the cart too far in front of the horse, but the USDA today said that the crop in Ukraine is 4 million tons, almost 4 million tons, or 160 million bushel bigger than a year ago. And they've got their exports penciled in about 80 million bushels more than a year ago. Bottom line there is, and of course, with a very fluid situation, needless to say, with the war with Ukraine and Russia, but if they can continue to export, they'll be in a better position this fall than they were a year ago if that production is realized to compete with the U.S. for some of those Asian markets. And bottom line is that, again, you're looking at a different scenario compared to a year ago, where everything fell into place, as it were. Luke mentioned a moment ago a great point, Mexican demand. You mentioned a great point, European demand, smaller crops in Russia and Ukraine, beg your pardon, and Brazil. This year, all those things maybe are not going to fall into that place. Who knows? What we know today, though, is that Brazil is harvesting a big crop. Ukraine is positioned to harvest a bigger crop if weather permits the next 60 days. So that was the one thing that caught my eye in the world numbers, Mark. The other thing was, if you look at next year's crop in Brazil for soybeans, I think it's 175 million tons. And this year was 169. The growth there continues. And the USDA did scale back the new crop bean exports today in the balance sheet. And so that's something that just a reminder. Again, that crop isn't even planted yet. We don't want to get too far ahead of ourselves, but just a reminder that the world competition, Mark, is very keen in 25, 26 if these crops are realized that they have penciled in.
Yeah, on the new crop soybean balance sheet, they increased crush 50 and took down exports 70, I think was the two numbers. And then there was some adjustments on the production.
Mhm.
Ultimately a 15 million bushel adjustment higher on the carryout.
Yeah.
So Luke, as we kind of, I mean, Brian mentioned the world seeing some good stuff growing and potential for good crops. The U.S. is sitting in that very much a very good position today as well.
Mhm.
Was it 86% good excellent in Iowa last Monday?
Yep.
Nebraska's doing really well. It's just starting to turn on center pivots. Minnesota's good. Kansas is good. I mean, does feel a little, as you go east, it's good, but not as good.
Mhm.
It's doesn't far from being a problem necessarily, but just a different style. As we look at going forward, I mean, guys are probably aggressive on trying to maximize yield given the opportunity here. How do you market this current situation we have?
Well, you look at it from the standpoint that, Brian and I were talking about this, is that, we reference a lot of times to the insurance rate guarantees and such. And a lot of people are looking at that from a standpoint that, I think we started the spring price in corn as examples at 470. And here we are just down hanging above $4. And you start looking at those scenarios and you say, well, I got insurance and I've got, depending on their coverage and what they chose to put on with their insurance agents. But what it really becomes something you got to start thinking about is, as good as this crop is and what the potential is how far above APH could you potentially have a crop? And start penciling that number in there and see what your real downside risk, because there's a lot of people talking, you get down to $4, you're getting close to the level where, hey, I'm covered. But that's only on your APH. It's those bushels above that. And if you start, again, you can play around with numbers and stuff, and then all of a sudden you can say 10, 15% potentially above that. You could see you don't really have coverage till you get down in that 350 level or so.
Well,
So what do you do about that? You got to play a defensive game. You just say, hey, what can I do? Can I sell bushels? I feel comfortable about my production at this stage. Or do I buy puts? Just say, hey, just put something underneath me at the $4 level and just, hope I don't need that. Hope I really don't need it. But you got to be realistic of what your expectations are. And at the same time, realizing the market can, do a lot of things. The funds have on a fairly good short position right now. And right now they just don't feel that position's threatened whatsoever.
No,
right?
No, doesn't feel like they have any risk today. And T-Storm noted in his monthly El Nino La Nina update that there's 5 years that were similar to this year as far as analog years. And what was interesting is all 5 of those years, in fact, did not see a dry August. I don't know if he said necessarily it was above normal preset for August, but nonetheless, not drier.
Dry.
Yeah.
And that would kind of imply the potential for kernel fill and all the opportunities for this crop to maximize its potential. So I think you're right. I think the best strategy is to look at your maximum opportunity and realize those risk bushels and, not a put or a put call spread, something to kind of just protect yourself so you're not beat up, if you will. Please be defensive, play on defense. I think that's a smart message. One more thing, I guess, on the corn situation, and we kind of have a chart on this, but looking at last year's December corn prices and then how it kind of relates to this year, it feels like it's literally walking in a very similar path. Doesn't mean it's going to, right? As you said, things can be different, but it is strikingly eerie how close those 2 years have been so far. Ultimately, we saw, the August dryness kind of impacting the market. Market got a little jittery, and then ultimately we saw the smaller yield. And as we fast forwarded we started to realize that as we got into January. But nonetheless, it is interesting. So we'll see how things play out going forward. I guess any other quick thoughts beyond what we talked about?
I think Luke did a terrific job, Mark, when you're talking about defending your balance sheet. none of us in this room and none of us in any room can predict price. What we can do, and Luke did a great job, manage price. And that we can roll down puts. We can look at doing something with short dated options. I would defer to Luke on that every time, but all those things are played into a portfolio, if you will, of risk management, Mark. And it's a way to manage price movement and avoid price prediction. We never know. Every year is different. It's hard to believe, but it's 5 years ago. We had a derecho come through in early August. Unfortunately, a catastrophic situation for a lot of Iowa. Certainly hope we never see that again in our lifetimes. But this year it could be a trade deal. So you got to remain flexible and manage price movement. Don't say market's never going to go back again or up again. Sure, it could go up. Might be a few months, but it could be a few days. But what you can do is remain disciplined in an environment that's full of uncertainty.
Yeah, no, great message. Great message.
I would add to that, a lot of the customers that you have out here that people are working with, there's still a fairly sizable amount of old crop bushels. They're going to need some home, and we're coming to the realization that this crop potential, we still got a few weeks to go here yet, but the potential. So we're going to see some grain move into the market one way or the other. And what I look at and I say, what can you do at these levels? Well, it's basically just make a cash decision. Either you're going to sell the bushels or you're not, or you're going to, but if you do, I would still say it still would warrant buying some type of upside, because call volatility is low. The fear in the market's gone down. All it would take is a storm moving across Iowa, Illinois, as Brian mentioned, just an announcement of a trade deal. Just look on those 2 days last week prior to the Des Moines rally. The market was getting excited about some kind of Chinese announcement. Didn't come, and we walk in Sunday night and the market just sells it off. But all it takes is just some kind of little trigger like that. So I just always say, always get in your position, do what you need to do from a cash standpoint, and you can defend that pretty easy if the market does rally.
Yeah, 100%. Well, I appreciate it, guys. I hope I hope everyone enjoyed this month's summary, I guess, of the report. We have another report August 12th. But until then, subscribe to the YouTube channel, and thanks for watching.